Myers Jaffe, and I'm Executive Director for Energy and Sustainability at University of California, Davis, and I'm a Senior Advisor to the University of California's Office of the Chief Investment Officer. I spoke today at GARP 2017 about the risks facing the oil market. Things that's being said, and by analysts and in the market and by OPEC, is that because there's been this cut in spending and exploration, we're going to have this giant hole of supply. Like, in other words, we're going to get to 2020 and we're not going to have enough oil because no one's exploring enough and spending enough money exploring, right? But the other way of thinking about it is a totally different way of thinking about it. Over the 2000s, when everybody thought the price of oil was going up, 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 and it was forever, and we were having depletion, companies wasted a lot of money on resources that they now can't profitably produce. So the most recent example is Exxon had spent $20 billion, allocated $20 billion to the Kearl project in the Canadian oil sands. And because that project was so expensive, requiring almost $100 a barrel or more to make it profitable, the Securities and Exchange Commission told Exxon that they need to reassess whether they need to take those reserves off their books as proven reserves. And indeed, a few weeks ago, Exxon did do just that. Shell did the same kind of write-down in Alaska. You've got companies that exited Venezuela and other places. So there was a lot of capital, in my opinion, over the 2000s that was wasted. I mean, billions and billions of dollars of spending on resources that will not wind up in any production. And so when you think about spending for exploration being down 25 or 30%, the question is, maybe it's more productive now. Maybe whatever is being spent now is going to actually turn into producible oil in the next 3 years. And then in addition to that, some of that drop in spending is not real because costs for US production, for example, have come down exactly that 25%. So there, it's just a wash. My costs are lower, so the same number of 25% less dollars gets me the same exact result. So it's not clear to me that we're going to have this quote-unquote supply hole that's going to drive the price of oil higher between 2018 and 2022. It's just not clear that's going to happen.